So the world is going green, but exactly how? And can this transition ever even be successful? We're here to discuss this and the outlook of commodities with Matt Watson. He is the founder of the precious metals commodity management firm. And Matt is an expert on all things base metals, as well as the outlook for the greenification of our economy. Welcome back to the show, Matt.
Hey, thanks for having me, David.
Matt, let's start with the proposition that we've been hearing in the news in the last month or so. President Joe Biden wants to make 50% of America's electricity generation to be from solar energy by 2050. Okay, that's not
correct.
Too far from now. That's less than 30 years. So, Matt, there's various facets to this. There's the demand side, there's the supply side. Let's talk about all these factors, but first let's focus on the bigger question. Is there even enough sun in America to fulfill this ambition?
Essentially, yes. In terms of irradiation, most of it in the southern states, southwest and southeast, yes, there is. Deploying the solar required in terms of real estate required, it would be massive amounts of solar grids to, industrial sized solar grids to be able to do this. By the way, so Biden's call for 50% of the grid to be renewables. Just to give you some context, the International Renewable Energy Agency, called IRENA, is calling for 74% of the global power grid to be renewables, both driven by wind and solar by 2050. So Biden's plan may be a little bit more realistic, if you will, than even the International Renewable Energy Office. So for what it's worth. The key concern I have with that level scaling of solar has to do with silver and with copper both. Silver today, just to give your listeners some context, in 2020, 115 gigawatts of new solar installations globally. It consumed 10% of a rather large silver market, a little under 100 million troy ounces of silver to accommodate that 115 gigawatts of new installations. The scale that Joe Biden's describing and that IRENA is describing is somewhere between 2,000 gigawatts to 3,000 gigawatts of new installations per year by 2050. And even though there's design thrifting that goes on with solar panels and the amount of silver used per watt, where is all that silver going to come from? There's design thrifting that goes on today where they are using lower percentages of silver in alloy form with copper as a conductive filler material. But how low can you go is really the question mark. And this is my big hang up. So 10% of the market today of silver goes into solar PV into one application. By 2050, will it be 50% or more? Question mark. And can the silver market really support that level of demand? I think that's a good question.
What is silver's primary role in solar panels?
So as you have collected this energy, it is the transmission conduit. There's traces that go on the front side of the photovoltaic cell, typically a polycrystalline material. There's traces that collect the energy, route it through often silver ribbons. You'll get to some cabling that are often copper cables that then run it to an inverter, convert it from AC-DC conversion, excuse me, and then proceed directly to the power grid and connect up to the power grid. So it's just a collection and transmission conduit. Silver's used because silver is the most conductive material on the periodical table, followed closely behind by copper. And then there's a big drop off in conductivity to gold, and then even a bigger drop off to aluminum, and then it drops off substantially to all other metals, including nickels and irons and other metals.
And there's no substitute for this conductivity?
Right. And so it's, there's a reason the engineers are specifying silver. It's a very hot environment on top of these solar panels. You can reach extreme temperatures during the daytime while you're in this collection mode. So I think even some of the thermal aspects of the silver serve it well. But often these alloys are 20 to 40% composition silver already today, again, with a copper filler, and used often in paste form. They're quite often screen printed onto the front side of the silicon wafers, and then banded together with different conductive materials to connect a series of cells into a module, which then routes the energy through cabling to the grid.
Okay, so Matt, then the obvious question is how much silver is left in the ground? How many more years of silver consumption can we last before we're completely out?
So in terms of global reserves, the number is about 16 to 20 years worth of global reserves today. It peaked in 1990 when we had about 18 billion. We've consumed that down to 16 billion. When you go beyond global reserves is defined as a deposit that is economically extractable at today's prices and locations and depths and ore grades. As you go beyond global reserves, you get into a bucket that's called inferred resources. Typically lower grade bodies are more difficult to extract, more costly to extract. There we have roughly another 40 years worth of silver in inferred resources beyond that 16 to 20. And the problem, though, that I'm describing with this equation with solar PV is the rate of consumption would be accelerating.
Yeah.
And so I think your denominator in terms of consumption rate is accelerating. And so maybe that total of 60 years suddenly becomes 40 or 30 years worth of metal before we run out. And that's the dilemma. I just want to state, one of the problems in the silver environment is in e-waste and in solar panel scrap streams. That today there really is no substantial recovery of those metals from those streams. Often the problem is that it's treated as a low-grade silver recovery process where we have the technology to extract it, but the treatment charges and the cost of extracting is more than what the metal's worth after you extract it. Therefore, it's just not economical. And so too much of our low-grade silver is ending up in landfills. And that's an equation we're going to have to bend. We're going to have to collect all this silver from end of life solar panels and all of our electronics, and how we do that. Really the key question is price. If silver's 23, it's a difficult proposition. You get silver closer to $50, $60 a troy ounce, some of the economics will take care of themselves. That process will begin.
Okay, so I mean, look, obviously you crunch the numbers. I'm presuming policymakers have looked at similar data as well. If you were in the Biden administration, why would you would say to yourself, well, you've got 20 years left of silver. Why would you make the policy initiative that we need to be, X amount of energy production with solar panels by 2050? Obviously, the math doesn't work out here. What do you think they're planning to do next?
I think those are excellent questions. Wind as well. Wind uses an awful lot of copper to complete those transmission from collection to the power grid. Offshore, much more so than onshore wind, where they're talking about building huge copper underwater cable systems to connect to the grid from all these offshore deployments of wind. These are really key fundamental questions. Same thing with the battery market. Where's all the lithium, the cobalt, and the nickel going to come from to enable all these lithium ion batteries? They're making declarations of zero emission mandates on vehicles by 2030, 2035, and the likes. Well, you add up the total net demand for the battery metals, same discussion. Well, you're going to blow through your global reserves and dig significantly into those inferred resources to make this happen. You're going to need much higher prices on these commodities to even make the mining environment attractive enough to draw the investment dollars to do the mining.
Are you saying $23 an ounce for silver is not attractive enough for a miner to?
Not attractive. No, it's got to be closer to $50 a troy ounce to make some of these recovery streams more attractive. I think to spawn new mining interest and exploration.
You're talking about reserves that are harder to reach, right? So as you drill deeper into the ground, for example, it's going to be more costly. The margins are going to be squeezed. Okay, so let me ask you the same question a different way then. How much more does the production side need to increase in order to match demand over the next 20 years?
I think it needs to double. I simply put, it needs to double.
And the price needs to double as well for that to happen, right?
Yes, I think so. Yes. Okay,
so which is going to come first? There's a chicken and egg problem. Is the price going to rise first, or is the miners going to start realizing they need to do something about it first, and demand's going to push up the price?
I think you have to see the price move first. The problem then becomes timeline from funding for a new mining operation until production. Those timelines are growing due to all the regulations that we're putting down. What used to take 5 years to develop an open pit mine is now more realistically taking 10 years on a simple open pit silver mining deposit or a nickel deposit or anything of the like. PGMs, it's much more complex. PGMs Platinum group metals, those are anywhere from a half mile to a mile deep in the ground in many cases in South Africa. There, your timelines today are 15 years, but they're going to be longer and longer there as well.
Yes.
And so that's one of the disconnects you see is even with prices climbing, and the prices will climb, it's going to take time for the production to catch up with all the regulatory hurdles that are in place globally now to create new mining interest.
Okay. So the other issue is let's assume that the mining site gets worked out and we have plenty of supply to cover growing demand. Let's assume that site gets worked out. What about our grid? Can our nation's grid handle the existing infrastructure? Can it handle an additional load from renewable energy?
This is a great question. Not enough people talk about what needs to occur to the grid. IRENA has been very clear on its outlook for the need for the grid. I plotted through 2050, and I concluded it needs to double. And IRENA corrects me. They say, no, it needs to triple in size. And to give your listeners some magnitude, there's 17,000 terawatt hours of electricity generation globally today. You need to grow that, and you need to grow it from today's baseline 50% higher. Why? Well, if we're going to make all this transition to EVs, it takes electricity to charge those EVs. You're displacing oils and fossil fuels as a resource, energy resource to fuel our vehicles, and you're going to the power grid. And so naturally, of course, the grid needs to be larger. So you need to grow the grid 50% or some 13,000 terawatt hours in scale just to charge some 2 to 2.5 billion EVs by 2050. Yeah. And that's the correct number. Furthermore, you need to grow it closer to 20,000 terawatt hours more when you hear about green hydrogen and the hydrogen economy and using electrolyzers to generate hydrogen. Those are very power intensive electrolyzers. It requires lots of energy, and they hope to use renewables to drive these electrolyzers. But, again, some total, doubling of our grid is required just to have the power to drive hydrogen generation. And again, that's the correct number. And so when we view the power grid, it needs to expand tremendously. Along for the ride, you're going to see more aluminum used in overhead power transmission lines. You're going to see more copper used in underground and underwater cabling systems. And so there's going to be a commodity draw on this. And by the way, what's the CO2 impact of doing that, of growing the grid at that magnitude? Often the CO2 impact from that is not captured. But we're going to need a substantially larger grid than we have today. And that's even with all the design thrifting and energy consumption thrifting, if you will, that they plan on us having through electronics and smarter systems and smart cities. Even with the efficiencies that they forecast are going to come to bear, you still need to triple the grid. It's that simple.
I guess the auto industry can make innovations on its own as well to help offset some of the load. Why don't they just put solar panels on the roofs of the cars so you don't have to charge them externally? I mean, I'm sure that technology already exists. I know it does. It just hasn't been commercialized.
Well, Fisker has been doing that for a number of years. There are a couple OEMs that have played with that concept.
Yeah,
it's just not enough to charge your vehicle. Right now, you need about, for every 4 kilometers driven on an EV, you need about 1 kilowatt hour of power to charge for those 4 miles driven. So yeah, you're going to need a lot of kilowatt hours to handle all the chance of miles driven, right?
That's right. Or repave the roads. I'm just thinking off the top, repave the roads with magnets, for example. It'll automatically charge the cars it's driving along. It's just
this is a very lively discussion. People get very passionate about clean energy as a discussion. They just think renewables are the only path. It's interesting to me. There's a lot of lead advocates for renewables that have actually shifted their positions. A lot of liberals. There's a gentleman that was the architect of Obama's Green New Deal that he's actually preaching nuclear as a much more efficient answer. That these renewables are not the golden pill that's going to save the day.
Yeah.
And there's a strong argument to be made for that, nuclear being a much more efficient way to electrify everything. So there's a number of leading voices, even liberal voices now, that have come to that conclusion. I think are correctly so. There's a number of economics professors now that are stating, hey, this drive for the metals to green everything about our lives, it's going to drive inflation. Like I'm describing, these prices of these metals has to go up. And with it is going to be the prices of all of our everyday goods. It's going to help drive the inflation discussion.
Mm-hmm.
And so I don't think there's any easy answers here.
That's right.
And of course, everybody wants to green up our environment. We all do. But what are the most efficient paths to get us there? Boy, it's a really lively discussion.
Well, nuclear is clean, but it's not technically a renewable energy resource, right? Because if I'm getting my definitions correct now, for something to be renewable, that energy source needs to be able to be replenished within one lifetime, which you can't do that with uranium, or yeah. So nuclear does solve the problem of baseload, which solar and other sources don't have. Yeah.
Exactly. So one of the big problems with wind and with solar is they are called variable renewables. They're not always on. Obviously, solar's only during the daytime. Your peak power consumption globally has the same profile. It's in the evenings. It's 9 p.m. It's from that 5 o'clock to 11 p.m. time frame is when you hit peak power demand. Everybody goes home, turns the lights on, the TV on, charging their cars. And so what are we going to do? Obviously, we can't rely on solar. And frankly, solar is a problem. Even in California today, people don't realize solar is being disabled almost every single day in California. There's too much. They have excess. Your conventional power grid made up largely of natural gas, you can't turn it on and off like a light switch. You can turn it off quickly, but it takes you 2 weeks to turn it back on. And so it's not effective at dealing with your daytime cycle in demand. So what are we going to do for a storage solution for these variable renewables? And this is a great segue into this discussion of this hydrogen economy. It's not just about fuel cell vehicles. It's about using hydrogen, taking this excess power generated during the daytime to use these electrolyzers, generate hydrogen, which in itself is a power source that can be burned to meet those peak evening demands and can also be used to fuel cell vehicles as well. And so I think hydrogen is the most logical and most engineering efficient discussion on energy storage on a massive terawatt level scale for global needs. And yet it still hasn't been demonstrated in terawatt scale anywhere on the globe. And so we're putting a lot of faith in this renewable push with nobody really having demonstrated in massive scale what our energy storage solutions going to be to balance this out.
Well, that's
meanwhile, we're seeing power grids in California and Germany, for example, have become some of the most expensive power grids in the globe. The rates of increase in my Northern California home, I'm now paying 29 cents a kilowatt hour. In Germany, they're paying 33 cents a kilowatt. That's awfully expensive compared to China paying 8 cents a kilowatt for a largely coal-based grid, right? And so we're going to end up paying for this overall as an aggregate community as we do more and more of these sorts of installations without a good storage solution.
So let's touch on storage before we move on to the grid again. Now, so the storage solution, obviously, as technology improves over time for more efficient, stronger, higher capacity batteries, what's going to happen with the metals markets? Again, going back to the metals, which metals are required for the next generation of batteries in the storage solution?
So the most common element, of course, is lithium. Lithium is common to all of them. Today, we're exploiting a lot of what they call hard rock deposits, mostly Western Australia. China has gone in and bought out some of the largest lithium mines in Western Australia. So that's a primary spodumene source for the lithium ores. Unfortunately, when you look at global reserves, the next big block of lithium comes from salt flats, whether it be the Bonneville salt flats out of Salt Lake City, next to Mexico City, or there's an area called the Lithium Triangle at very high altitudes in Chile, Argentina, and Bolivia at over 12,000 feet elevation. These huge salt flats in the Andes mountain range. Well, the problem with those is to extract the lithium, you need 500,000 gallons of fresh water for every 1 ton of lithium extracted. They're already having water wars with the indigenous people in that region on a very small scale of mining, and they want to dramatically expand that. Well, how are we going to do that? So again, another kind of an ESG challenge is the water needed to manage lithium extraction out of the brines.
Okay. Now, you mentioned to me offline that in California, sometimes when there's too much sun, that they turn off the solar grid. I mean, that just seems like a waste. What do you think of this concept, and they're experimenting with that in some places around the world, of smart grids? If people install their own solar panels or wind farms, for example, they have a surplus energy, they can actually sell electricity back to the grid. So your 29 cents per kilowatt hour, or 30 cents if you're in Germany, you could actually reduce that cost by selling excess capacity back to the grid. What do you think of that idea?
Well, again, California has all the energy it needs during those daytimes with conventional power grid resources. They've tried to sell it to neighboring Arizona and to Oregon and Washington, these surrounding states. But of course, they're not going to take it. Why pay twice the rate of their internal state rates? So they're having trouble finding a home for it. They're talking about making some of this excess, giving it a subsidized rate, again, to help feed some of these electrolyzers to generate hydrogen. But there's one of the big dilemmas, I think, in the clean energy space is you hear a lot about the cost of solar and wind being on par with fossil fuels. It's true when the solar and the wind is on. The levelized cost of energy equation is correct when those power sources are on, but they're not only on 20 to 40% of the time. And when you take the fully burdened cost, that's what drags down your power grid cost, I think, aggregate. And that's the dilemma that Germany and California are facing as they have the highest rates of penetration on these variable renewables.
The other issue is obviously the cost of the solar panels themselves. I was talking to an old college professor of mine who was telling me that he also lives in California, like yourself, and he has in his backyard a solar panel to offset some of his electrical bill costs. And he was telling me that it basically costs him a few years in cost savings to make back the solar panel in terms of its cost without the battery. If you include the battery needed to run that system, it'll take him 15 years to make back the cost and energy savings, which is
That's
a long
correct.
time.
Typically a 5 to 8 year payback for most residential users is what it takes to pay back for your upfront cost on a solar installation in a residential. By the way that the subsidies are set up, I would do that. If I had a swimming pool in California and needed to heat that swimming pool, by all means, put a solar grid or solar panels on your rooftop and 5 to 8 year payback. Using the batteries, that would help your peak demand, meeting your peak demand in your household, but it's much more cost. And one of the challenges there from a metals perspective is you need more battery materials. So not only do you need to build all these Teslas and these EVs, now you need to build all these stationary batteries to support solar grids as well. And indeed, that's happening. So you're seeing it on a residential level. You're even seeing batteries being used on an industrial grid level where they're trying to help flatten out to meet some of those peak demand intervals through a storage solution of using lithium batteries. We're going to have trouble meeting the ramp for vehicles alone for all the EVs. Adding strain for all these storage batteries just adds to the weight equation and adds to the millions of metric tons of material that you're going to need to support those battery transitions.
Well, a 5 to 8 year payback period is still too long for some people, especially for people who think to themselves, I'm not going to stay in this house for 5 to 8 years. It doesn't make sense to me on a cost perspective. So what does the solar panel industry need to do to bring costs down? Is it even possible right now to bring costs down even lower than they are?
It's not talked about enough, but if you read PV Magazine, which I've helped authors with articles on this, solar panels have been getting cheaper year over year for about 3 decades now. That changed in the last year. It doesn't get enough press. They reached a low of about 21 cents a watt at the module level for a Chinese, what's called a polycrystalline module, the most typical module that's sold around the planet. Now, suddenly it's 29 to 31 cents a watt. Those prices have gone up. Why has it gone up? Well, silver's gone up. Last year we were at 15. Today we're in the mid 20s. The backsheet material's gone up. The silicon itself has gone up. Glass has gone up. And so commodity prices rising have actually made the module cost go up. Interesting. And so after 3 or 4 decades of consistent declines in the prices of solar, the past year it's gone up. Will that continue? Well, if you're going to start taking this to scale, a la the Biden administration and what Irina wants us to do, most certainly silver prices are going to have to climb to meet these demands, right? And I think you're going to see more of this. There's a number of, I think, very talented economists that are saying this clean energy transition is actually going to be inflationary in nature because of the commodity impacts it's going to have. It's going to drive power prices up. period.
Maybe policymakers should just stay out of it. Maybe they should just let the private sector and market forces deal with it. Because like you said, they're artificially creating price inflation for the underlying metals. That in turn, you're telling me silver needs to double in price for mining to pick up to meet demand. But once that happens, solar panels are going to be even more expensive.
Yeah.
I mean, how does that make sense?
And I want to go back. You started this last little conversation with the discussion about nuclear.
Yeah.
It's fascinating to me that so many of the clean energy advocates in both California and Germany are suddenly very anti-nuclear. We in California have already shut down one of our primary nuclear plants. It was in the San Diego area called the San Onofre power plant on the ocean next to Camp Pendleton. Now they want to cut down the next remaining, the sole remaining power plant, nuclear power plant, the Diablo power plant. It's outside of Santa Barbara, beautiful Santa Barbara. And it's about 9% of the California grid today. But the key thing about nuclear, it's super reliable and consistent day or night, seasonal, very little low downtime annually for maintenance. It's the most reliable power source that we have, and very condensed, very packaged, small footprint plants. And again, I call people to question our strategy relative to nuclear. I think there's a lot of leading edge liberal renewable advocates that have changed their opinion, have changed their mind, and they're calling on us to deploy more nuclear to be the backbone of our power requirements. And I just want to point to, just to wrap up, France is a great example of this. Some 70% of France's power grid is nuclear. That's key. That was key in saving Germany during this last winter doldrums when their solar and wind went to zero through the heavy winter. It was France's nuclear that helped save the day for Germany. And yet clean energy advocates are trying to cut that down. I think there needs to be a better balance, of having nuclear as a component, a clean energy component. Yes, there's nuclear waste we need to manage. There's just hyper fear over nuclear in general from a safety perspective. I think when you dig into the data, that those fears are way overblown.
Sure.
France is able to accept and adopt nuclear very effectively. Why can't the rest of us? Just leave you with that challenge. And then, as you know, there's a number of people banking on uranium as a result of that, right? The uranium is undervalued. And so Rick Rule and a number of people are banking on uranium taking off for these sorts of reasons.
Final question, Matt. Investment implications, putting everything we talked about together.
Well, I think copper and silver is a fantastic bet. I don't see any hyper movement in pricing. I think it's going to be a slow and gradual creep. Silver's been growing at about an 8.3% CAGR over the past couple of decades. There's no reason to think that won't continue and even maybe pick up a couple of points on the CAGR. Copper, we're seeing it reach all-time highs. I think the picture, it continues to be stressed. I don't think there's any way the mining community catches up with the aggregate demand there. Copper, again, EVs use 3 times the copper than an ICE vehicle. Renewables use anywhere from 3 to 10x the amount of copper in our conventional grid. So I think copper, with the electrification of everything, is in a good position. PGMs, I think there's going to be a transition for the hydrogen economy. I think platinum and 2 very little known minor metals, ruthenium and iridium, are the key to the hydrogen economy. I think that's going to be essential as part of the storage discussion going forward. And then finally, the battery metals. You're seeing even PGM miners like Sibanye recently invest in a Nevada lithium mine. Lithium in particular, I think, if you're looking for quicker returns from a mining perspective, some of these lithium investments, lithium is going to be core to pretty much any battery technology now, or even the next generation jump with lithium sulfur. We're always going to need the lithium.
Interesting. Matt, thank you so much. Very great discussion, and I look forward to having you back again soon to talk more about all these base metals. Thank you.
You bet. Take care, David.
And thank you for watching our coverage of the IPMI conference. Stay tuned for more. I'm David Lin.